Hi, this is Kevin Blanche. Today I'm talking about your 401k and what a scam the whole freaking nightmare is. Now let's talk about your 401k contributions you've been making for the last 10, 20, 30 years. Okay, Wall Street has influenced through lobbyists over the last 30 years in Washington to push money towards Wall Street. Every law that's been passed over the last 30 years is to appease them. Look, we had the 401k thing has exploded over the last 3 decades. In 1980, about 10-11% of the United States population had money in the stock market. Now it's 80-90% through your 401k. Now let's talk about how you're losing your ass. Now remember this. We're going to use the most common portfolio in America. 33% Dow, 33% S&P 500, 33% NASDAQ. Okay, that's the most common portfolio in America. There's been many studies done over and over and over. You say you're contributing to a fund that's technology, a fund that's cyclical, a fund that's staples, fund. Look, many studies have shown these guys are all invested in the same thing. Look, these fund managers don't even watch the stock market. They build a computerized matrix. They hire a math PhD. Okay, he builds it into the matrix. They don't even watch the market. All right, they're in Vienna, they're freaking traveling, they're laying on the freaking beach, whatever. Then they do what they call window dressing. Now, what is window dressing? Let's talk about that. By law, a fund manager only has to disclose what he really has invested at the end of each quarter when your statement goes out at the end of each quarter. So what they do, they come in at the end of the quarter, they buy up things they think that their investors would be congruent to what funds they have. Then, as soon as the statements go out, quarter ends, they sell them, go back into whatever they got. Look, 85% of fund managers don't even beat the market. Only 15% consistently beat the market. I mean, they buy the spiders, which is, I mean, you can buy index funds, you can buy the entire market. Now let's talk about the Dow, the NASDAQ, and the S&P 500 in the context of their weighted indexes. Now remember this, as an investor, you think, oh, the Dow's up X amount, X amount, X amount. Remember this, if a stock is doing poorly, it gets thrown out. That doesn't mean you save your money on that thing. Look, GM was a major component of the Dow, got thrown out. Now let's talk about the values over what has happened to your money the last 10, 20, 30 years, okay? Everybody says, oh, I got what I've got, 95, I contributed some, 99, I contributed some, I've been contributing $10,000 a year, every year, blah, 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 blah. Oh, okay, I'm pretty well averaged into the same thing. I've got, $185,000 in the market. It's sitting at $185,000, or it's sitting at 210. No, it's not even close. Over the last decade, we had massive inflation. The CPI and the PPI are such bullshit numbers. Let's talk about inflation over the last 10 years. As a good fund manager, as a good economist, you have to weight the money via, you got $185,000 worth of stock, you have to weight it against something. Okay, whether it be against real estate, whether it be against gold, whether it be against oil, to see what the real value of your money is. Foreign currencies. So if you go in the last 10 years, let's talk about it. In the 90s, gold was saying $225 an ounce. What was silver? $4 or $5, maybe less than that, $3. Okay, oil, $10, $12, $15 a barrel. House, the median price of a house, I think it was $165,000. Over the last decade, everything went crazy. So I build a matrix where I take gold, I take oil, I take real estate, I take 3 foreign currencies: the euro, the pound, and the yen. And that's how I weight it against it. So as I weighted it, so you say you've contributed the whole time, you've contributed $185,000. Say you have $185,000. If you weight it on an average weighted over the last 20 years, I can show you that your $185,000 is worth, I mean, you hear this number, you're going to be sick. Right around 30 grand. Little window between 35 and 25,000. That's a fact. Okay, say you had money in the market. Let's say 1997, 98, you're going to say, oh yeah, the market was raging up there. Well, the NASDAQ was. I mean, the NASDAQ was, what, 4,500? It's 2,300. We'll use the S&P 500, the broader index. Okay? So you contributed, let's say you put $100,000 in, $10,000 a year all through the 90s, or through the, say you started 93, or I don't care where you picked it. So you take that money, instead of putting it in the stock market, you went and bought a house, or you went and bought some gold, or you went and bought some hard commodity, anything. Okay, now you have the same amount of money, correct? So to say today you're going to buy the house, or today you're going to go buy that gold, or today you're going to go buy whatever that hard commodity might be. Fleet of vehicles for your business, some hardware for your business, whatever. So you sell it. How much are you buying? You were buying this then, you're buying this now. I hear this bullshit, oh, this low interest rate, we're going to have inflation. We already had inflation, and they're right. Why do you think this interest rate is kept so low over and over and over and over? It is to push you to Wall Street. Look, you can't get no money in a return in a bank account. They know this. I mean, there's been studies done for freaking decades about this. The lower the interest rate, the more psychological people will go to the markets. These guys are scamming you so bad, it is sickening. Look, I know it's hard to put money in a bank account, but look, if you're investing in the market and you're just using a fund manager, do your homework on this guy. See who they are. See what the return is over the last 10, 20 years. The whole thing is a big fat scam. Look, they've pushed the laws like this. You contribute $10,000 into your 401k this year, you don't have to pay taxes on it. Till you're 65. You're 20, 30, 40. The government is already talking about, well, Greenspan used to write about it all the time, how the demographic of the United States population is getting older. There's 80 million baby boomers in this country. I mean, the average baby boomer right now is around 60 years old. Okay, they're retiring. So that age is getting pushed higher and higher and higher. And I hear people say, oh, the government can't do that, they can't do that. You remember in the early 80s when the savings and loan scam happened? And they froze everybody's bank account, and you could have $1 million in an account, and you could only get X amount of cash out of your own bank account, a couple, $200, $300. That's a fact. That really existed. So if you don't think the government can change the rules on you, they've got to. I mean, they will. You mark my words. They will do whatever Wall Street asks them, just like they've done for the last 30 years. And Wall Street's going to ask them to push it out. So you contribute $10,000, $10,000, $10,000. So I'm going to turn 65. I'm going to pull this freaking money out and live happily ever after. Well, they're counting on maybe you die. Which population does. You're going to need it early. Huge population runs into some catastrophic. They need it early. Well, you know what the penalty is. Say you got $100,000. Go pull it out. The early penalty and the taxation, you're going to have maybe 30, 40 grand freaking left. My point is, you need to understand these things when you go in. The market is speculating. These fund managers aren't even watching the market. Computers are trading everything on Wall Street. That's what that flash crash was all about. These guys don't even work, trust me. I know plenty of them. They don't do anything. They're not as sophisticated as you think. Now, granted, there are some out there. There's some hedge fund managers and some smart managers out there. But there's the mass majority are, they could care less. They're taking a percent go in, percent go out, and they have a rule what they call putting down the gate. A lot of people don't know this. If there's a rush on their freaking market, they throw it down, nobody can get out. Two years ago, a lot of you people know this. They can put down the gate for a year if they want, and they do. You can't get out. And it's legal for them to do it. My point is, before you start throwing money in the market and you start thinking about these things, especially if you're a young person, my advice to young people is put it in the bank and let it grow. Stay tuned. I'll break this down even further for you. Kevin Blanch, September 2010.